Thank you. Welcome, Mr. Chairman. It's good to have you here, and congratulations on your confirmation. You talked about the accommodative fiscal policy that's in place right now, and just out of curiosity, I know there's people predict y'all are going to raise rates 4 times this year. You're definitely going to raise rates some. How much did the tax bill that was put in place, how much of that is affecting your desire to or your likelihood of raising rates over this year?
I wouldn't single it out, Senator. I would say.
No, I'm not trying to single it out, but just out of curiosity, it is in fact something that is going to be stimulative. So how much of a factor is it in looking at raising rates?
You know, fiscal policy is one of many factors. We're looking, as you know, we're looking at stable prices, maximum employment. That's what we're looking at, and everything that happens in the economy and financial conditions and fiscal policy affects that. We can't really isolate one thing, like fiscal policy. But I think, I would expect that fiscal policy this year is going to add meaningfully to demand, and that's going to put upward pressure on inflation and downward pressure on unemployment. It's hard to quantify, but it wouldn't be the main factor. I mean, the economy's strong, and it's even stronger now.
Yeah. So then, as it relates to growth, you said it was going to increase demand. How much of a factor is it in your growth projections, the passage of the tax legislation?
As I mentioned, I think it will add meaningfully to growth for at least the next couple of years. The real question is, how much will it add to, and the amount of that is subject to very different estimates by different approaches. But I guess the bigger question is how much will it add to longer run growth? And there are a couple of channels through which that might happen. Higher investment should lead to higher productivity, which would raise potential growth. Lower tax rates on individuals should increase labor supply. These are highly uncertain, but we hope the effects are meaningful there as well.
Mm-hmm. You know, we've been through a decade now, I guess, since the crisis, and many of us were here during that time. It was a pretty heady time trying to resolve those issues, and yet we went through periods of time when we were worried about deflation. Obviously, we had really accommodative monetary policy during that time, and here we are again at 4.1% employment, down from 10, as you mentioned. The economy's strong. And yet still, let's face it, I mean, 2% inflation. I know y'all are combating anything getting out of control. Elaborate on the factors that in this day and age, in this economy, in this world situation, what is it that is keeping inflation at such a low rate?
It's a global phenomenon, and we don't perfectly understand it, but I would say since the crisis, a big factor that's been weighing down on inflation has been just the weakness in the economy. You've had a lot of slack, and the economy has not been tight, and so that it makes sense that would press downward on inflation. We also had, the strong dollar and lower oil prices in 14 and 15. That pushed down. So more lately, we would have expected inflation to come up by a few more tenths than it has, and we see identifiable idiosyncratic factors. There are other stories, though. There's the Amazon effect story. There's global slack. The idea that slack around the world is affecting the tightness of the U.S. labor market. Really hard to tie those down from an empirical standpoint, but that may be having some sort of an effect on inflation as well. It is a global phenomenon, though, so it's not just tied to domestic factors.
So I know that my friends on the other side tend to focus a lot on the tax bill, and there's hope that growth is going to overcome any kind of deficits there. It may or may not occur, but we are, in fact, getting ready to spend $2 trillion more that we don't have by passing the bill we just passed. We've got an omnibus coming up over the next 10 years. It's a minimum of $2 trillion in additional spending, almost twice what the president requested, and we have $21 trillion in debt today. How much does the deficit picture for our country come into play relative to the Federal Reserve, and how concerning is it to you that we continue just to party like there's no time ending here in Congress.
We're not on a sustainable fiscal path. We need to get on one. This is a good time to be doing that when the economy is strong. But that's a longer run problem. It isn't really, it's not a problem for today's monetary policy or economy. It becomes a problem gradually over time as we spend more and more of our expenditures on on interest rate, on debt service, and we have less and less to do the things that we really need to do, and as we pass along bills to future generations. But the unsustainability of our fiscal path isn't something that has too much of an effect in the near term on our policies.
Thank you, Mr. Chairman, thank you.